Hello, guys! Oh, you're all awake. Welcome back to the next keynote for today with the fabulous Derek Morrison. Give a warm welcome to Derek. Derek Morrison is the director of Europe and of StockX. For the few of you who don't know StockX and are still tapping in the dark, it is the leading market reseller for handbags, streetwear, and all the items you can buy and resell there. I'm super excited to hear the keynote today from Derek Morrison about the future of e-commerce. Again, welcome, and let's kick it.
Thank you. So we are StockX, the stock market of things. I always like to start with this slide. Sorry, just the audio. If the monitor's not on, if that can be turned on, that'd be great. I like to start with this slide because it shows, on the surface, these are two very similar looking shoes, right? On the left, you have the Oreo Jordan 4, which was released in 2015 as a retro by Jordan brand from Nike. And on the left, you have the same model, Jordan 4, the M&M Carhartt collaboration. So on the surface, they look very similar, but what's really unique about these two shoes is the difference in the price, or the value, rather. So the Oreo, the shoe on the left, resells for around 200 euros right now. That's a little bit more than retail. If you had a pair of shoes, this pair, and you sold it, you'd make around, say 50 euros. The shoe on the left sells for an average of around 20,000 euros. And we look at the two shoes, and they're very similar. So what could really explain this difference? And quite simply, it comes down to one thing, which is supply and demand. The shoe on the left, the Oreo Jordan 4, released more than 100,000 pairs. Nike doesn't publish precisely the volumes that they release, but we know that there's more than 100,000 pairs of this that was released. The shoe on the left was not available for public purchase at retail. It was an exclusive production by M&M for his select friends and family. And then on eBay, they released 10 pairs to the public for auction. So if you wanted to go and buy the M&M shoe, you'd either have to be a very close friend of M&M, or you would have had to spend tens of thousands of pounds or euros on the shoe on eBay. And so on the secondary market, because of his popularity, because of the limited supply, there's an incredible amount of demand for this shoe and very, very few pairs. And so it's quite a simple explanation for how that price ends up being so high. Now, when we look at the sneaker market overall globally, some people are staggered to know that the annual value of the retail market for sneakers is more than 90 billion euros. And maybe what's even more fascinating than that is that the secondary market, the resale market for sneakers, is estimated about 5.4 billion euros upwards per year. Now, when we look at sneakers, that seems quite crazy, right? This is, people reselling sneakers. A few years ago, our co-founder, Josh Luber, did a talk about how the secondary market for sneakers for Nike was actually bigger and more profitable than their nearest competitor at the time. But when we compare this industry to things like art or to other kind of collectible markets, the size of the secondary market relative to the primary market actually isn't that crazy. Now, what might be surprising to you is when we look at Europe, it's been estimated as high as 1.7 billion euros per year for the resale market just in Europe. When we look at the size of Europe, we look at the prevalence of trainers, we look at the people in this building and what everyone's wearing on their feet, it's maybe not that surprising. But by 2023, some people are estimating that the secondary market for sneakers is going to comprise more than 25% of the total annual sneaker market. If we compare that to art is around 30%, 35%. So we see this trend not necessarily slowing down. We see this actually, a lot of people predicting that this is actually going to continue to go. And some of the things that are going to drive that is the fact that it can actually be a very difficult process to produce sneakers. It's not necessarily celebrated as the most sustainable. So looking at a lot of the supply that already exists based on consumer trends leads us even further to reasons why we want to continue to buy from a product that's existing in the market. And this is kind of where we come in. We come in as the stock market of things. And I'll tell a bit more about what exactly that means and how we function as a marketplace. But in principle, all we are is a place to connect buyers and sellers. There's a whole lot of shoes that exist out in the world, and there's a whole lot of people that want those shoes, and we're just trying to bring them together in a way that we think has been more efficient. There's a lot of reasons for that, which we'll get to. But where we're at now, we're coming on our 4th anniversary. We're founded in the USA. Our headquarters is in Detroit, and I came on about 2 years ago to bring the business to Europe and start to launch our European operation. And in that short time, we've already achieved a lot of growth and a lot of scaling and a lot of attention, because for a long time, people just thought it was quite novel. There's a stock market for sneakers. What a cute little idea. But what I think people have started to realize is that this isn't just a game. This isn't just some kind of novel, quirky business. We've now been valued at over $1 billion, which means what it means. It is what it is. But I think it's more what we like to talk about is that, hey, this is something serious. This is something that people should pay attention to. This isn't just a flash-in-the-pan fad or a gimmick. When we say that we want to be the stock market of things, we mean that earnestly. And so this is kind of what our model is. Our model is a live bid-ask marketplace. So it's not a gimmick. Our platform functions just like the stock market. People go on and they place bids for how much they're willing to pay for an item, and if you have the item, you go and put an ask for how much you're willing to sell it for. And it's completely live. So you can go onto the app, you can go onto the platform right now, and you can see every transaction, you can see the current price of exactly what that shoe's trading for. And we have 3 tenets of kind of what makes this work, or what's really important to how we've set up this business. And those are on the right. So it's an anonymous marketplace. So if you're a buyer and you want that pair of shoes, or you want that M&M Carhartt, or you want that Jordan 4 Oreo, you don't necessarily care who's selling it to you. What you care about is that you get that item, that it is what you're looking for, that it's authentic, that it's not a forgery, it's the right condition, it's brand new, and you care about the price you're willing to pay for it. When you look at all of these other marketplaces, you spend so much time researching the person on the other end of that transaction. Do I trust this person? Is this person trying to rip me off? Is this person selling the real thing? And all of those things that you have to assess affect what you're willing to pay for it. But they shouldn't, because all you care about is getting the thing you want and getting it for a price that you think is fair. And so transparency comes on the back of that. So while we're anonymous about the people, we know that it's incredibly important to be transparent about everything about the process and everything about the product. And so if you go onto our platform, we show all live information about the bids, all the historical trading data to show every transaction that's ever happened for that product in your size, to help you make the best decision of what you want to pay for it, because you can see what other people have paid for it, you can see what people are willing to sell it for historically, and what they're willing to sell it for right now. And so we believe very strongly in the power of that information to help you make the best decisions. And then authentic. So this is kind of the sauce that makes it all work. In order for you to have an anonymous marketplace, you need to be able to guarantee what you're providing. And so we sit in the middle of every transaction. If you sell a shoe and then someone buys it from you on our platform, you ship it to us. We authenticate, we inspect every product, we verify the condition, we verify the size, we make sure that it's not a forgery, we make sure that it's not dirty, that it's not been worn, because everything on our platform is brand new condition. And then we send it to the buyer. And what's important about that is because by providing that guarantee, it makes it even easier for the buyers to focus on what they want to pay, because they don't have to absorb any of the risk of, well, I'd be willing to pay a little bit less if there's a risk of it being a fake, or if it being unworn, or for all the hassle that goes with it. And so sitting in the middle is really kind of integral to making sure that all the information processes the right way, that you can trust the information and make the best decisions. And so the product categories that we have on our platform, started with sneakers. That's still the majority of our business. And then we expanded into streetwear with brands like Supreme. That's expanded to things like Palace and Fear of God, and Travis Scott merch, and a lot of different other streetwear apparel. We've also worked with watches and handbags, which have been other categories that we launched shortly thereafter on the platform. With handbags and watches, what's unique about them on our platform is these are the only product categories where previously used items can be traded. With handbags and watches, there's a difference in the marketplace of kind of how the product performs and is perceived by the market, and so it works for these specific products right now to be sold as in excellent condition. And most recently, we've added collectibles. So collectibles from things like on the right, we've got cause figurines. We've got lots of different art collectibles, Funko Pops, and we've just added recently to the platform, for people who know what that is, Bear Bricks is another very popular toy collectible category. And then we've also added trading cards, which is especially popular in the US. So baseball cards, football cards, hockey cards, things like that. And what's interesting about these with the trading cards is they already come authenticated. They have a PSA grading system that allows us to make that a very simple product to add to our platform, because we don't even need to authenticate it, because they already have an industry guarantee. So this is what a product page looks like on StockX. So if you compare it to, say, other e-commerce platforms or marketplaces, things like eBay or eBay is a good example. If you want to look up this item, or you want to look up a particular shoe, you'll find thousands or hundreds of listings for the same product from different sellers with different prices, and you have to scroll and scroll and try to figure out which one to buy. The first thing that we did is we took all of those transactions, just put them on one place. So instead of having 100 or 1,000 listings for the same item, we have one page for that product. So all transactions for this product or any product on StockX happens at the same place. Then if you're a buyer, the green button you can click on if you want to buy it. You can see that right now you can go to that page and buy that item for 1,024 euros. Or you can put a bid. Maybe you don't want to spend that much. Maybe you only want to spend 1,000 euros. Or maybe you only want to spend 999 euros. You can bid however much you're willing to pay for it and leave that there until a seller comes along to try to collect it. So you have a buy now price based on the lowest ask available, or you can bid how much you're willing to pay and see what happens. So on the red side, that's the sell now button. And this is one of the biggest innovations I think we brought to e-commerce for sellers, is that means that someone has gone on our website and bid 1,013 euro. So the red button, the sell now button, is the highest bid that's on the platform for that product. And that's tied to a credit card or to a PayPal. So you can go there as a seller. You don't need to even wait to sell your item. You can just accept someone's highest bid. So I can either list it for sale for 1,025 euro, or I can sell it right now with 2 clicks of a button and just ship it and be on my way. And so that's, I think, what really started to transform and fuel a lot of our growth, was the rate at which people were able to sell things, because you didn't have to wait for buyers, and buyers didn't have to wait for sellers. You could place your bid, make your declaration, go to bed, wake up, and have the seller had accepted your bid. And this is a really kind of transformative thing, and that's why I think sellers have come to us so much, because they don't have to worry about communicating with the seller. They don't need to worry about getting meetups or getting ripped off or all these kind of things that can happen. They go, they have the product, they see the price, they sell it, and they send it to us, and it's all taken care of. And so this is kind of the 3 phases of how we got to where we are now and got to that point. So we started as a data company. Josh Luber, our co-founder, created Campless. And what Campless was an attempt to try to create a price guide for the world of sneakers. Because of marketplaces like eBay and forums and where things used to be transacted, there was no real reference point for what you should be trying to pay. So what they did was they tried to kind of scrape all of the data from all the different marketplaces and transactions happening and put it into one place to say, hey, this is a bit of a price guide for these products, just in the same way that you find with vehicles. And so then that transformed into this stock market of things where we thought, hey, we have all this data, why don't we use this as a way to kind of bring buyers and sellers together? And the model of the stock market worked, which we didn't invent, by the way. The stock market's been around for hundreds of years. We just took that mechanic and aimed it at these things. And so that became the resale platform that we kind of know. But what we think is really the opportunity now is to transform the retail market. Now, when we talk about retail, we talk about resell, you don't go to Apple or to Nike and you buy shares in the company at the retailer and then resell them on the stock exchange. Those stocks get released into the stock market and then they're resold in the same marketplace. And we kind of see the opportunity for the same thing to happen with consumer goods. And so we've actually done some of these where we call them IPOs, initial product offerings. And most recently, we did one with Adidas, which was a Creators Lab series that they did with 3 designers each one created 333 pairs of the models that you see up there. And instead of these going to the retail and being released in an Adidas flagship or in a tier 0 kind of stores, these are actually released directly to the marketplace on our platform. So there's no retail price. If you were going to retail these, they would probably go for around 90 euros, something like that. And then if they were really limited, you'd have queues or you'd have raffles and all these different ways of how you were going to get it. Maybe some were going out the back door. And then they would be reselling on a platform like ours or on the streets or in groups for a much higher price, right? Because we know that the demand is far greater than the 999 pairs that exist for all the people who want them. And so our idea was, well, if that's the case, if there's so much demand for this product, why don't we let the consumers dictate what the price should be? So instead of releasing it at a hollow, low price, let the market say what that product should be released at. And so we did what's called a blind Dutch auction. And this is what that kind of looks like. So for, say, 72 hours, you could go to our page, our platform, and we had product pages for each of those shoes. And as I said, there was 999 pairs in total, 333 for each one. We had over 10,000 bids for people wanting to buy those shoes. That's, when I say bid, that's someone with their credit card, with their PayPal, who's gone on our platform and said, I have run a transaction, I'm willing to pay 150, 250, 450 euros for that shoe. And so for 72 hours, we let anybody go and bid what they're willing to pay. You can't see how much anyone else has bid. You can see how many people have bid, but you can't see what the price is. So all you have to worry about is what you want to pay for that shoe in your size. And then after the 72 hours, we close all the bids. And then we look at what is the market clearing price. So in a blind Dutch auction, it looks something like this. So say there was 10 pairs of each size. So if there was 10,000 bids, and say there's 1,000 bids for each size, once we close the gates, the top 10 bids for that size are going to be the people who get that shoe, right? They're the top 10 highest bidders, and maybe it looks something like this. Maybe someone bid 1,000, and then the 10th highest price was 200 euros. But because it's the same product, there should only be one price. So we say that the clearing price is that lowest of the winning bids ends up being the price that everybody above should pay. So in the case of the Adidas IPO, the average clearing price ended up being about 180 euro. And what's really interesting about that is if we look at this example, if we have 10 people that get that shoe, 9 out of the 10 people who've bid are actually getting it for lower than they were willing to pay. So actually getting a pretty good deal, right? If they were willing to pay 500 euros for that pair of shoes and they got it for 180 euros, I'd be pretty happy. And then what's great about this is it's fair. Anybody could do it. Maybe it's not going to be the cheapest price, but it's going to be fair based on what the market says. And everyone has access to go participate. You don't have to know somebody who manages the store or have a connection at some other place that's going to with a personal shopper. You want this shoe, you have an opportunity, just like anybody else, to go and declare what you want to pay. And then after, we see the shoe continues to trade. And then the price actually goes up a little bit. So you'd think that all the people who wanted to get the shoe, that would be the price, and then maybe it would go down after because people were just trying to make a bit of a gamble. But what we actually see is the opposite. So now, the Adidas shoes that cleared at 187 are starting to trade up towards 300 euros. And so it's actually a really good time to try to get it is through this auction when you have the most access, the most fair way to bid, and then it's probably going to be the cheapest opportunity you have to get it as well. And so this is where we kind of see that's the retail curve, and then we see this kind of next layer, which is, really transforming the way we perceive price, challenging the way we look at value of consumer goods. Price is supposed to represent the value of that item, and there's so much effort that's put into trying to convince people to pay a certain value based on perceived scarcity or because that's just what they feel it should be priced at. And we really believe that we should be turning over much more power to the actual consumers. Let the market tell us what that thing is worth. And we feel that creates a lot more accountability on the side of the brands, on the side of the designers, to create product that's, if you want to sell something for 500 euros, you then have to commit to creating something that resonates with enough people to justify that price. And you get an instant response from the market about that. And so we think that this is a really important thing. For so long, the industries have been kind of driven by the supply. Publishing industry was driven by who controlled the production of the books. The movie industry was controlled by who could create that, create the art, create the films. Now, with the way that the kind of internet has revolutionized our access to things in digital publishing, the supply side of those industries have really had to challenge themselves to create much better, much more compelling output. And I think that there's no reason that the same pressure can't be applied in the consumer goods industry. We should be focusing less on the supply chain of these products and shipping them tens of thousands of times and having aftermarkets and gray markets when we can create a central place for all of this to happen where there's one shipment. There's not 10 shipments for the same shoe. You release it once and it goes straight to the buyer at the fairest price. And so when we look at the bigger idea for this and what this actually works for, we don't see it being for every item, right? You're not going to be selling toilet paper or pens in an IPO this way. Those are going to be kind of true commodities. And we think that there's two really good examples for businesses on either side of this axis. We'll look at Amazon on the one side for infinite supply goods, things that it doesn't really matter. They're real commodities in terms of consumer goods. Amazon is really focused on providing the best experience for that. And right now, they're on top, and we'll see how long they do that as a pretty gigantic company. But we think that they've got that model, in a pretty good place. And then eBay and auction sites and auction houses on the other side, these are the best places for a true one-of-one item, a real unique piece of art, something with sentimental value, these things that you can't really, there's not enough supply for it to fit in exchange. It's really like an auction that works best. But everything in the middle that has limited supply, that's finite, we think that our model is actually a better way for buyers and sellers to connect, whether it's through an IPO or whether it's through the resale and secondary market for those items. And right now, we're just in these limited categories that we've talked about. We've already talked a bit about the growth that we've experienced, but we see so much opportunity to be in the middle of that axis. And we're not saying that we're there yet, but I think that's just to articulate the vision of where we aspire to be as a company and what we think the power of this model can provide. And as we've grown, and we've grown our marketplace, we've grown our global audience, we've also recognized that there's a really fantastic opportunity to harness that community for a really positive impact. And so this is the shoe on the wall here. This is the Colette Friends and Family Jordan 1. Now, for people who aren't familiar with Colette was a really transformational boutique retailer in Paris by Sarah Andelman and her mother. And actually, High Snobiety has done a fantastic documentary that they've just released showcasing the store and telling that story. And when they closed the shop in 2017, Nike produced a limited supply of this shoe just for the staff and for the team and the friends and family of Colette. And we were working with Sarah Andelman on a couple other projects, and she mentioned that she had 30 pairs left of this shoe, and she wanted to do something with them. And we said, why don't we do a charity auction? Why don't we do a charity raffle to raise some funds for Oceana, the charity that she had picked? And so we took 30 pairs of sneakers, and we did a charity raffle. You could go onto the website, you could donate. It was a minimum of, I think, 20 euros, 16 euros, $20 to make a donation. And you could buy as many tickets as you want, you could donate as much as you want to be entered for a chance to win a pair of these shoes. And so we had this run for 72 hours, and I think what we're really excited by is that we raised 162,000 euros in 3 days for 30 pairs of shoes. In the first 48 hours, we'd raised 78,000 euros. And so I think this was, we just emailed we had a little bit of we put a press release, but we put this on our website. It wasn't like a big campaign. This was just trying to harness the energy of the people that we have on our platform. And this isn't even the first one that we've done of this. We did this a few years ago in the USA with Eminem, and it was for hurricane relief. And he had a bunch of other kind of celebrities donate pairs of shoes, and we raised almost $500,000 in the same duration, in less than a week. So not only are we really excited about how we can empower the consumer for the consumer things they want, but we recognize the opportunity and kind of the obligation as well as a marketplace and as a community to take that energy and also try to harness it in positive ways, working with designers, working with charities and other institutions we can to really invest back into the community and into the culture that we operate in. And so I said that we're almost 4 years old as a company, and we started in Detroit. we opened some other authentication centers in a couple other places in the US. I was the first person hired outside of USA by StockX to come on board. And in the time that I've been here, we've expanded, as you can see, kind of across the world. And part of that is just getting closer to the people that we work with, getting closer to our sellers, getting closer to the supply. And that's a really important thing for us. So we have some offices in Japan, we have our office and European headquarters in London, and we have authentication centers kind of spread across the globe. And so in 2019, we had a really fantastic year. For me, it was crazy. It used to just be me in a coffee shop in London, talking to people like Pascal, who's going to be on this panel shortly. And now we're at a team of over 100 in Europe. And we've gone for 130% increase in our registrations and our users just in the last year alone, which was on top of another, I think 200% growth the year before. We're now, as a company, over 1,100 people, and so much of that is focused on the authentication, but really building out all of the teams and departments that really are critical to scaling this global business. Nobody expected StockX to grow this fast or this big. Certainly not the founders, certainly not the investors that we first started with. And so a lot of the challenges that come with that, we've been having to invest to catch up to. And we can have a long conversation about what it's like to be a tech startup that's growing this fast. And it's the best kind of challenge to have, but there are tons of really important challenges that come with it. And when people call you a billion-dollar company, or you say you're a unicorn, or all these kinds of things, there becomes other sets of expectations and things that you really need to mature to quickly. And we're still figuring that out. We've localized in 3 languages. We've launched in German, in Italian, and in French in this past year. And that's another really important commitment that we're making to the markets that we operate in to try to create the best experiences so we can try to capture as many people as possible to really fuel and continue this centralization of what we think is really important for this industry. And I hope that gives you a little bit of an overview of what we do at the stock market of things, what we've done in the past, what we're really excited about in this bigger ideas going forward, and what we think is a really incredible opportunity for consumer goods and consumers. So, thank you.
Thanks so much, Derek. So guys, thanks for the insights and everything. Guys, do you have any questions or anything to Derek Morrison from StockX? You go.
Mm-hmm.
So
it is then possible that the person will, of course, overestimate the real, let's say, bid, and then take advantage of that lower price of the 10th place, let's say. And finally, if they are not satisfied with the item, can they actually say that the size was not correct and I want to return?
Sure. There's a couple layers to that. So the question is, and let me just repeat it because you didn't have the mic at first, is what's the return policy, or how do returns work in such an instance? And then, which I'll talk about, and then separately, the kind of game theory of the kind of gambling on guessing what to spend. So the first IPO we did, I'll speak about the kind of gaming the bid a bit because it's kind of interesting. We did one with Ben Baller, who's a celebrity jeweler in California, who's quite an enigmatic character, and we did our first IPO with his slides. So it's basically flip-flops. It's not a very interesting product. It's not a compelling piece of design. It's not going to be in any sort of design museum at any point. But it did kind of really work as a test bed for the model. And what happened was somebody went and bid $1 million on several different sites. I think they placed 10 different bids of $1 million with a credit card. So it wasn't like, putting a declaration of bid. They went with their credit card, placed an actual bid that was a pre-authorization for $1 million, knowing that the price was going to be far below it, right? So they're basically saying, I just want to make sure I get one of these shoes. I'm sure it's not going to be that high. And then they get it for the lower price. But it is a bit of a risk because if, 10 people out of 10 shoes play the same game, all of a sudden you have a $1 million shoe. Now, with this instance, as a marketplace, we connect buyers and sellers. It's anonymous for this. This is for the secondary market. So the return policy is kind of a bit of a challenging space because it's not. It doesn't fall under the jurisdiction for a lot of the transactions that would for the EU 14-day return policy, for example. So, but in the instance of, say, an IPO, where it is a brand selling it, you do have all those rights as a consumer to cancel your bid, to change your bid. And then what happens, and this has happened with us, is then we go to that next bidder. So we kind of, the market clearing price continues to kind of go down as we run all those pre-authorizations. So if the 5th person goes down, then all of a sudden the 11th highest bid would now be the clearing price. Does that make sense?
Yes, totally. Thank you.
Cool. Anyone else? A question? If not, you always have the opportunity to ask Derek, right? I'm right.
Yeah, absolutely.
Right here. He's up next now at the next panel talk coming up. Give it up one more time for Derek Morrison.
Thank you.
Thank you. You can just sit down if you want.
Yeah, great.